Hello, everyone. This is Javon Foster, and this training is going to be on trading plan, right? Trading plan is the key to success within this space, all right? Let's get started. Trading plan. A trading plan is an organized approach a trader has when executing a trading system. In other words, a trading plan is a roadmap for how to trade. Before you start trading, you should know what you're looking for and how you will be approaching the market. Now, the first thing on your trading plan, right, should be your mindset, right? Throughout this, before I even continue throughout this presentation, throughout this video, please take notes, right? This is, I'm going to go over 9 things that should be written down in your trading plan, and the first one here is mindset. Before starting to trade, make sure you're comfortable. You're in a comfortable environment. You're awake and focused. Something that you can have is a daily routine based on the time that you're trading. So for example, for me, I trade in a New York session. I trade starting at 8 in the morning. So I'll wake up at 7, brush your teeth, wash your face, get fresh, have a cup of tea, make sure my workspace is clear. I'm in a quiet environment. This way I can be focused and I'm also alert, right? Next should be your trading style. Now, the question is your style going to be solely technical analysis, fundamental, or a combination of both? Now, what is technical analysis? Technical analysis is a range of techniques used to try and forecast the future price movements of the financial products based on the historical price movements and patterns, right? In a short explanation, technical analysis will be just trading what you see on the charts based on previous price movements and not based on any form of news. Fundamental analysis, right, is the process of breaking down the impact of political, economic, and social factors on the relative value of currency through identifying the primary drivers of a currency value. Fundamental analysis will be watching the news, right? Seeing what type of important information is about to come out that can affect the market and the direction of the market. Before moving forward, right, one of the biggest it doesn't matter if you trade just fundamental, based on fundamental or technical analysis. This week is one of the most important weeks that all traders should know, and that's NFP week, which stands for non-farm payroll. This is a report. This report is a key economic indicator in the United States. This report on the first Friday of every month, it gives an update of the employment rate in the U.S. minus farm, government, private household employees, and those who are employed at nonprofit organization. As a trader, it is important to know this because it caused the largest movement within the market. For new traders, it's recommended you avoid trading at this time. Not even just for new traders, to kind of take that back, for all traders, right? I trade at times during NFP, but unless you could make a proper analysis on your trade during NFP week, it's best to stay away because the market is really volatile. One website that you can use to see Forex news and upcoming Forex news is Forex Factory. You can also look at Bloomberg.com, MarketWatch, and Yahoo Finance as well. Trading session, right? This what is your trading session? What session you like to trade in? You have the 4 major sessions, or the Sydney session, the Tokyo session, the London session, and the New York session. The Sydney session starts from 4 p.m. Eastern to 1 a.m. Eastern Standard Time. The Tokyo session is from 7 p.m. Eastern to 4 a.m. Eastern. London session is from 2 a.m. Eastern to 11 a.m. Eastern. And the New York session is 8 a.m. Eastern to 5 p.m. Eastern, right? The New York session is a session I trade in. Note, the Forex market, as I mentioned in the very first training video. The Forex market opens on Sunday at 5 p.m. Eastern, and it closes Sunday at 5 p.m. Eastern, and it closes on Friday at 5 p.m. Eastern. Another key note is to avoid trading at 5 p.m. Eastern on a daily basis. The reason why, the spread is widened at that time. That's the time when all the ECNs and liquidity providers stop operation. Also, the spread, if you don't know what the spread is the difference between the bid, which is the sell price, and the ask, which is the buy price for a currency pair. Next on your trading plan should be the pairs. What pairs do you want to master, right? You want to trade pairs based on the session you're trading in. So for example, if you're trading in the New York session, you want to trade USD pairs, right? Like USD CAD, CAD JPY, right? Canadian pairs is also good, CAD JPY, USD Chef, etc. If you're trading in the London session, you want to trade GBP in Euro pairs, right? Euro GBP, GBP USD, etc. As traders, it's good to focus on a few pairs. This way you can understand and get used to the volatility and how it moves. This way you can also have a better trading rhythm. Time, right? So after you figure out what trading session you want to trade in, right? The London session, New York, Sydney, Tokyo session, right? You also want to focus on what time within that session you're looking to trade. For example, I trade in the New York session, right? Which is from 8 a.m. Eastern Standard Time till 5 p.m. Eastern Standard Time, but I do not trade all day, right? The time that I trade is the open of the London session, which is 8 a.m. and I trade until 10 8 a.m. So 8 a.m. So I trade for 2 hours. Next on your trading plan, you want to have an ideal setup. What are you looking for when you go on the chart, right? Are you looking for a smart money setup, smart money entries? Are you looking for and what I mean smart money entries, if you watch the videos, the Smart Money 101, which is consolidation, or are you looking at that liquidity grab, Smart Money 102 trading, right? What are you what type of strategy you're looking to trade? It could be market banding. Are you looking for more of patterns, right? Harmonic patterns, flag patterns, triangle, diamonds, etc. With your ideal setup as well, you want to have a list of confirmation for why you're entering the trade. It's always good to have minimum, really a minimum of 3, but standard should have about a solid 5 to 7 reasons to why you're taking a trade. Now, next on your trading plan, you want to have a risk plan, right? How many pips are you looking to risk? How many pips are you looking to gain daily, right? Is your risk plan going to be, I'm looking to, as an intraday trader, I'm looking to go 20 to 40 pips daily, right? If you're a scalper, I'm looking to go for target 10 to 20 pips daily, right? Also, how many percent of your account are you looking to risk per trade? Are you looking to risk 1% per trade, 2% per trade, or 3%? It's always recommended to go risk only 1 to 3% and no more over 5%. How many trades you're looking to enter? How many trades you're looking to take daily also should be on your risk, be within your risk plan on your trading plan, right? Less is more, right? You don't want to take 10 trades daily, right? You could be in one trade and have multiple positions, right? But you're looking to take, it's always, once again, recommended to take about 1 to 3 trades daily, 5 trades, no more than 5, right? Also, how many days per week are you're looking to trade? I personally trade Monday to Friday, right? You can have your trading plan where you trade only 3 days a week, Monday, Tuesday, Wednesday, or 2 days a week, Tuesday, Thursdays. What is your trading? How many days you're looking to trade? Okay. And that also, the days, before I move forward, the days that you're looking to trade, that also comes in and factor based on what type of trader you are, right? If you're a swing trader, you're looking to probably hold the trade for 1 to 3 days or more, right? So you may only be in one trade for the whole week. You may only be in two trades for the whole week, right? As a swing trader. If you're an intraday trader, you may trade probably 3 to 5 days a week. If you're a scalper, you may trade every single day of the week, right? Money management is the next thing on your trading plan. Now, the recommended rules, right, across the board from, for anyone that's trading, right, you never want to let a winning trade become a loser, right? Know when to move your stop loss to break even, so which is entry, and when to move stop loss and profit. You want to learn how to trail stop loss, right? And also know when to take partials. Another rule is that you never want to marry a trade. What that means is that do not continue to adjust your stop loss every time price get close to it, hoping that price will reverse and go in profit, right? My specific trading rules, right, that I share with the team and everyone. My first rule is that once 10 to 20 pips in profit, move your stop loss to entry, right? Once you're 20 pips in profit, I look to take partial. I'm an intraday trader, so I look to go to anywhere from 20 pips to 100 pips. I may hold a trade. I'm a little bit mixed up for intraday to swing. I may hold a trade for 1 day max. I do not like to be in a trade over a day. Also, overall, once 10 pips in profit, the trade is considered successful, right? 10 pips can make 10 to 20 pips can make you rich, right? A lot of people don't understand it's all based on your lot size, right? So as your account grows, right? As your account grows, previously 10 pips could probably give you $10, but as your account grows, right, and you're risking a certain amount of percentage, that same 10 pips will become $100. And that same, as moving forward, that same 10 pips will become $1,000, $10,000, right? So it's all based on your lot size and your account size. But 10 to 20 pips can get you rich. The goal is to have growth and be successful on the market. Also, my personal rule as well, if I have a limit order, right, a buy limit, sell limit, if trade miss our entry and TP1, right, take profit 1 hit on that limit order, we delete the trade. We do not continue to hold the trade. Last and the most important thing, guys, is discipline. Discipline is key to success, right? You want to stay disciplined to your trading plan, right? You want to stay disciplined to how many days you trade, what session you're trading in, the time that you trade, right? You want to be disciplined in your routine, what you do before you get on the charts. You want to be disciplined on your risk management. If you're looking to risk 2% every day, or you're looking to risk a certain amount of dollar amount on your account, or how many pips you're looking to go daily, right? You want to be consistent with that. You want to be consistent with you want to have a certain pairs that you focus on. You don't want to look at everything in the market, right? Because you'll be all over the place at times. You want to focus on a few pairs, master those pairs, understand the movements, right? This way, as I mentioned before, you have that rhythm, that trading rhythm. So when you get on the chart, right, you're comfortable and you're making proper decisions. Once again, guys, these are the rules and the things you must have on your trading plan. Thank you guys for your time. If you have any questions, we want to schedule a one-to-one where I can help you develop your trading plan, something that fits your personality. Feel free to reach out to me or send us an email, and we're glad to get back to you, schedule a one-to-one. Thank you. Bye.